Hello and welcome to Policy Watch, your one-stop shop for all the top business news of the week, their context, their relevance and impact. I'm Govindraj Ethiraj. Some new economic numbers are coming in. The index of industrial production is down to 2.6% for the month of January from 3.23% for the month of December. So it's down. The other number that we're going to be looking at is the consumer price inflation number at 5.7% for February, which is up, thanks mostly to rise in items like food. So we're going to talk about why this is happening and, more importantly, what does this reflect on the current state of the economy, and having said all of that, where should we go? Joining us to understand this and dissect this a little better is D.K. Joshi, Chief Economist at CRISIL. Mr. Joshi, thank you very much for joining us. So, we came out of the budget, we had an interest rate cut, things were looking somewhat okay, but now we're again seeing a fresh round of numbers which don't really inspire confidence, do they?
Well, I think things are on the mend, but at a very slow speed. I think where you really see improvement is current account deficit lower. Inflation, compare it to what was in last 5 years, it's still very much within the comfort zone. But I think the IIP data that was released and also the inflation data, I think what I pick out of that is IIP has a lot of noise in it. I mean, it's difficult to pick out signals. But what is very clear is you're going to see improvement in industrial growth compared to last year, but the improvement is very mild and over a negative growth last year. So it's not being felt.
Okay.
I think within IIP, the consumer goods segment is very weak, and which means that people are not opening their purse strings despite being more confident and despite the fact that consumer confidence has gone up. As far as inflation is concerned, I think this is more of a result of food prices. The core inflation, which measures demand pressure in the economy, has actually gone down. So it is, I think, from a central bank perspective, this is not an area of too much concern. But yeah, I think within food, the vegetables have been highly volatile, and I think this is what spiked the
13% more specifically. So let's look at index of industrial production a little more closely. So if we were to break it down, now if we look at the types of manufacturing, we look at, let's say, something like radio, TV and communications, which was down 50%. So what can we take away from each of these sub-segments?
Well, these are, I would read them as noise, but I think part of the telephone instrument was because of the Nokia factory, which is still getting reflected because it is out. But I think overall, I think I would always take the IIP data with a pinch of salt, because one, its base is still 2004-05. It needs to be updated, and data collection tells you that, I think, and revisions thereof on the previous data tell you that the reliability is low.
Right. So yeah, December was revised from 1.7 to 3.23%.
That's right.
So what does that mean, but when something gets revised so dramatically?
Well, I think what it means is that the first round of information that you got was insufficient, and I think when more information became available, you came to know that actually the speed was much faster than what you estimated earlier. So it is basically a gap in data collection. I think you need to, the first estimates need to be.
So you're saying that there's a mild recovery, which is what. And that's a sustained trend, right? I mean, you're not saying that the mild recovery is because of what we're seeing now, but if you were to look over time.
Yeah, I think it is a sustained trend, and it's over a very weak base. I think last year the industrial sector did not grow. I think what's worrying there is the mining sector, which was beginning to pick up, has again slackened.
Yeah.
And the electricity, which was driving industrial growth to some extent, I think that has also slowed down.
So I noticed that mining and power is the worst since October 2013. That seems to be quite a gap.
Yeah, but I think if you look ahead, if the mining auctions have been fairly successful, and if coal actually starts hitting the coal mining actually starts, then I think you will see the pressure ease off for electricity generation also. So it could, I think my sense is that these two segments will again move up. My more worry is on the manufacturing side.
Right. Okay. So let's talk about consumer demand. Why is that not showing any change? So I mean, and why is there a difference between what we are measuring in terms of consumer confidence and what consumers are actually doing?
Well, consumers are confident because of the economic environment. I mean, because I think there is a hope that things will improve. I think all that makes a consumer confident, and consumer is more confident about future than about the current situation. I think that's what the RBI survey also shows. I think now why it is not getting reflected is because his incomes are not rising. I mean, the nominal GDP growth in 2015-16 is expected to be the same as it was last year, and I think some kick to consumption will come from the fact that the fuel prices are lower, so there will be some savings to the consumers, and also because food inflation is not as high as it used to be. So if your income is rising at the same rate as last year, but your food inflation is lower, then you will have some additional money left out of it.
So another question, in many economies, in the Western economies, seems to be a direct correlation between falling energy prices and increase in consumption. or at least consumption in terms of money in the hands of the consumer. Do we see similar trends in India as well?
No, not so much. I mean, it will affect a few pockets. I mean, but in US particularly, I think it is a big factor because everybody drives. I think so. The penetration of automobiles is much higher there. So people immediately see the difference, and the gas prices very quickly reflect on the. In India also they reflect, but in India the penetration of automobiles is.
So given that the recovery is mild, although sustained, given the fact that we are seeing concern areas like mining and power, consumer durables, and so on. What needs to be done now?
Well, I think what needs to be done is you have to ensure that inflation doesn't go out of hand. I think that is one. Second, I think what has been announced in the budget that they'll focus on investment, particularly I think railways and roads. I think they should make sure that these go through, because in the last 3 years, whatever has been announced in the budget, I think it has been cut back. I think this is going to be a source of some pickup in manufacturing sector. If railways go up through backward and forward linkages, I think you'll see some manufacturing activity also picking up. Mining, again, I think I'm hopeful that it'll pick up, and mining picking up will be good for commercial.
So mining is one, and you're saying that, it's interesting, you're not talking about private investment, but you're talking about public investment.
Yeah, I think reason is that it is now well understood that the private sector is not going to take the lead, and because I think their capacity utilization is low, and it's lower than and the next 2 years also is going to be lower than the average of last 5 years. So there is excess capacity in the system, and they will, unless they feel the need for new capacities, they will not come forward. So and the heavy lifting will have to be done by the public sector, and in recognition of that, the budget programmed public investment increase in whatever way they could. I mean, there's not much space with the government also, because they have to keep the deficit.
So assuming that the investment, whether public or private, and you're saying it's more public rather than private, is going to take a while, and this is more like a medium to long term measure, what are the short term measures if needed?
Short term, I think you can't do much, because short term steroid is only either you cut rates very sharply, and we've seen
that was my question.
Yeah, rates have been cut, but they have not been transmitted, and there's not much scope for the rate cut. Maybe we believe another 50 basis point, because I think central bank is eventually targeting 4% inflation from from 2016 onwards. So, and then on the fiscal front, I think you've already stretched your fiscal target. I mean, from 3.6%, which was promised earlier, you've gone to 3.9%. And you don't have the leeway to push the demand through fiscal spending. So I think there's not much scope for pushing demand, and global environment is weak. I mean, it's getting reflected in exports. So you'll have to live with a gradual recovery, and the structural measures that are being taken and have been talked about in the budget are all good for the medium run. Immediately they can't fire growth.
Give me an example.
I think even let's say bankruptcy law, or you say the PPP framework for where government does more risk sharing, or a plug and play system where private sector is given all the clearances are in place and they just come in. I think all these things are very good for the medium run. Even the implementation of GST is going to help eventually, and also the corporate tax reduction, which they are saying over time. I think they are all going to be efficiency enhancing, but not immediately this year.
Right. So a last question in a way. So you did touch upon or refer to the global environment, which is not looking so strong, particularly for export demand. Are there any concerns or red flags there, or could there also be sort of windows of opportunity for India as an economy?
Well, I think India definitely is a bright spot, because the world is not doing well. I mean, in BRICS, it is the fastest growing economy, and among emerging markets, its resilience is higher because the growth is picking up, and also because your current account deficit is low. So India is looking good from a perspective of attracting capital. But I think, having said that, the risk areas are, one is Federal Reserve raising its interest rates. As and when it happens, I think it will cause some tremor, and it will it will impact capital flow into India as well. But eventually, I think India stands a good chance of recovering, because it's as I said, it's a bright spot in the emerging markets. So that is one, and then I think the other are geopolitical risks, which we have to live through and see how they pan out. But the biggest risk at this juncture for the financial markets is from the central bank in US raising interest rates.
Right, and just to touch upon private investment, since we did spend some time on public investment, are you getting a sense that India Inc. is now prepared? I mean, in a sort of physically ready in terms of balance sheets, in terms of ability to actually take the slack when it comes to sort of boosting the economy?
No, not right now, because I think we did a survey just before the budget, and the survey pointed out that the private corporate sector actually their investments could be lower in 2015-16 compared to what they were in 2014-15. So there could be some cutback on investments. The public sector is still expected to do slightly better as far as investments are concerned. So private sector is not in a position to fire the growth of the economy.
And the sort of the energy for this all will come from the banking sector, i.e. capital. Do you see that changing? I mean,
banks are still risk averse because I think because their NPAs are high, and what government tried to do in the budget was they're talking of double leverage, etc., create an investment fund, and also I think what is positive is maybe some money will be raised through bond markets, etc. But beyond that, I think the financial sector is not so healthy to aggressively finance growth, and also there is no demand, not so much demand for funds as well, because unless there are investment plans, I think you would not require.
So sort of to wrap that up, are you arguing for a rate cut at this point?
Well, I think if
further rate cut.
Further rate cut, we expect about 50 basis point, not beyond that. And I think more important than that is desire. I mean, expectation. And if you ask me, I would say that I would say there will be 50 basis rate cut in 2015-16 fiscal year. That's our call. So it's a desire as well as our expectation that central bank will do that. But I think more important is, will the bank start passing it on? And I think still now there's not much sense that they are going to transmit that, because the cost of capital is still high, and I think they are not in a position to transmit that into the economy.
Bids at the ongoing telecom auction have now crossed the 100,000 crore mark. What this means is that companies are quite fervently bidding for telecom spectrum, which will allow them obviously to expand and offer more services to the consumers. What does this eventually mean to consumers, which is you, and the price that you pay for the services that you subscribe for? And more importantly, can the companies who are paying all these high prices afford to sustain it at the longer term? So that's the question we are asking to Sanjay Chawla, senior analyst at investment banking firm JM Financial. Sanjay, thank you very much for speaking with us. So first question, Sanjay. A lot of money has been collected, right? So obviously this suggests that telecom companies are keen to grab that spectrum in order to obviously offer the services. So first question, can they afford it? Second question, whether they can or cannot afford it, what does it mean for consumers?
I think this question has to be answered at two levels. One is, can they afford to lose spectrum? Okay. I think the answer is no. Yeah. Clearly, a lot of the spectrum, which is being auctioned is actually in-use spectrum.
Correct.
That's a very unique phenomena which is happening in India, that companies which have been using the spectrum for 20 years, the same spectrum is actually being put into the auction kitty, and they have to win it back to continue doing operating their networks.
So let me ask that quick question. Actually, that struck me too. So suppose, let's say I am company A, or maybe let's say Bharti Airtel, Vodafone or Reliance, and I have a certain amount of spectrum with which I am giving people like you and others services, and if I lose that spectrum somehow in an auction, what happens?
So a lot of the big companies have already kind of taken insurance, by buying some additional spectrum, which happened last year, because they could foresee that this thing is coming next year. So they spend a lot of money in building a spectrum bank. In case they were to lose this particular spectrum, which is the prime spectrum they've been using for 20 years to provide basic voice services, basic voice telephony. If they were to lose that, then they have some fallback available. But yes, there are certain pockets, there are certain service areas where that fallback is not available. And therefore, those operators who are running those networks, they are in a must-win situation. So that's where I said, some of these operators cannot afford to lose it at all, at that level, that you'll have to shut down your business because you don't have a fallback spectrum band available.
And is that a geographic thing, or is it something national? I mean, suppose I lose some spectrum. Will I lose it nationally? Will it affect operations in some circles, or how does it work?
Yeah, so the way India has allocated spectrum is service area wise, which are mostly coterminous with the state boundaries. So there's no concept of a pan-India kind of a spectrum which is allocated, like what happens in the US. If you get spectrum here, you get spectrum everywhere. But in India, it's circle-wise. So yeah, it's if you're not able to win back the spectrum in a particular circle, then in that circle, if you do not have a fallback, you'll have to shut down the service.
And could that happen to some of the operators?
Well, the way auction is, so now we are into the day 9th of the auction, and there are certain pockets for certain operators where that risk has been there. But the way we see it, that risk is highest for, let's say, a smaller operator like Reliance Communication. Other operators have been facing this risk, in bits and pieces here and there. But I think given the amount of money that they have at their disposal or they are willing to spend for competitive reasons, I think they should be able to retain their spectrum by and large. But yeah, I mean, some operators may be unlucky.
Okay, right. So that's phase one of the issue. So let's look at phase two, which is that having spent so much of money in trying to either retain spectrum or win fresh spectrum, which allows them to arguably grow the market.
Yeah.
What kind of strain does this place on their balance sheets, on them as companies?
So, it is the spectrum auctions which have actually led to a lot of debt creation on the balance sheet of the companies. And we had the first big bang auction back in 2010. Since then,
where we collected 106,000 crores for 3G and 4G.
Exactly, including the money collected from public sector operators. If you keep the PSUs outside, the private sectors committed about 70 to 80,000 crore in 2010. Last year they committed another 60,000 crores. This year the bids are already in excess of 1 lakh crores, and that's entirely attributed to the private sector operators. So you're looking at least government having made, including this auction, will have made about 2,50,000 crore plus from the spectrum sale, and that's roughly the amount of debt which is there on the balance sheet of the companies. So you can basically say that spectrum auction have led to debt creation on the balance sheet, and hurt the finances of the return profile of the companies as well. So the point is that the way operators are looking at the whole situation is that yes, in the short term, their balance sheet does get impacted, but I would still say that the top 3 or 4 operators have got the that strength to kind of prevent a meltdown. But the telcos are also looking at a 20-year time frame, because this spectrum that they're renewing is going to be valid for 20 years. So they have that much more time to actually pay back the debt and earn some returns. But in the short term, I think it's not going to be very good for profitability of the operations. Telecom business anyway is not a big money spinner anymore, what it used to be 5-6 years ago, before the auction era. So returns profile is going to be impacted, and as far as shareholders are concerned, they should be prepared for that.
Okay, so let's talk about consumers for a moment. So we are also looking at all this at a time when pricing has overall been falling in favor of consumers, right? Whether it's voice or data, which is obviously the more attractive thing going forward. So if prices are going downward or have been going downward, so will prices go up, or will telecom companies become more oligopolistic and start controlling prices or maintaining prices?
So the simple answer is that over a period of time, these costs have to be recovered, and the only way to recover it is through customers, through pricing power. But the reality of the market is that as far as the voice business is concerned, which is the the cash cow running for 20 years, where there's still some growth left, it's been very hard to raise prices in the voice business, because the business is commoditized and there is just far too much competition out there. Just to give an example, we have seen prices going down to 35 paise per minute for the large telecom operators. In the last 2 or 3 years, they managed to pull it up by 3 paise. But again, in the last 1 year, we have seen it going back by 1 or 2 paise. So, in the last 3 years, they've just managed to increase the voice prices on an average by 1 to 2 paise. So it's very hard to raise prices in the voice business, and I think there the competition is the key determinant. So unless the market consolidates, I think operators will find it very difficult to raise the voice pricing.
Right.
However, data is where there is some room to grow pricing, because the data market is less competitive. Not every telecom company has got 3G spectrum, for example, in the whole of the country. So data market, there will be some pricing power. At least there is a window to, they have to raise prices over the next 12-15 months maybe. But then the big bet there is, what happens after Reliance Jio, which is a big pan-India operator going to launch primarily a data-centric 4G service. What are they going to do? So there will be competition in the data market as well. So I don't think if there is any price rise, I don't think that will be sustainable. Eventually the pricing curve is headed down. So the only way you can make money is you can hope for better volume growth. People consuming more and more data, consuming more and more voice, and and your operating expenses being in check.
Right. So if I were to sort of stick to the outlook for the consumer, you're saying that because there is even more competition around the horizon, chances are that prices will either remain stable or even come down further, particularly for data, which normally costs higher than voice.
Exactly. So we may have a short-term uptick in data prices for 6 to 9 months, but I don't think that's going to last. If you have got 4 big, well-funded pan-India players, that's enough to give you a lot of competition. In voice, of course, we've got 7 to 8 operators who are competing, but even in data, 4 operators is good enough to create a very healthy and competitive market. So
Right.
I don't think there is any room for operators to improve the pricing from here over the long term.
Right.
Voice, we may see, as I said, depends on consolidation of the market.
Yeah, but broadly you're saying that prices are steady to go and they will go down. Now, are there any lessons that we've seen internationally which suggest to us how things could go from here? Because we've had auctions elsewhere too, right? I mean, UK,
Right.
Europe, US.
Right. So, auction, of course, auctions are the norm now whenever governments have to sell spectrum. So we keep seeing auction every year. We saw back in 2007 in the US when they auctioned the 4G band, and since then we have seen auctions across Europe, Hong Kong also. Of course, India has seen a lot of auctions. But the difference is that if you look at the auction reserve prices and also the discovered prices in India, particularly for these prime bands, 900 megahertz kind of bands, the pricing is 5 to 10 times higher. Even if you adjust it for population and for the purchasing power of the economy. So the spectrum pricing in India has been on the higher side, and that's something which from a policy point of view, one can question whether this is the right regime we are into. I think the jury is still out there. So pricing is high, and that's why the operators need that much more support in terms of having some consolidation and getting some pricing
and that's
power
an interesting
back.
point. So you're saying that if the consumer at the end of the day has to be comfortable with lower pricing, then also in some ways the auction pricing reserve should be lower so that the government itself is not trying to extract too much from this.
Exactly. So what is happening is essentially the lot of the money which is going to the government, if the spectrum prices were kept lower, that benefit will actually flow to the consumers at large. But given the situation we are stuck in, that may not happen. Having said that,
so why are reserve prices so high? I mean, what's the thinking?
Well, it's turning out to be a kind of a legacy issue. We auctioned 3G spectrum back in 2010, and that was a scarcity-driven auction. So the prices went sky high. There were only room for 3 or 4 operators in every circle, but the number of operators who were vying for it was 6 to 7. So it ended up creating very high bid prices, and now we are stuck with that. And governments, in their own wisdom, they've taken a view that that is the benchmark, that is the basis of the price for future. So we are stuck with a certain artificial kind of a price regime or discovered prices back in 2010, and we are headed more and more into that direction. So today, for example, the discovered prices in today's auction, they can be the basis for future auctions. And so the point is that at the end of the day, something's got to give. Whether this regime is sustainable or not, I think the jury is still out there. If you see some of the smaller firms going under, then I think maybe this will lead to some
it's already given
change.
a signal that it's not sustainable.
Exactly.
Right.
The point is that you have the market already is getting consolidated.
Right.
In fact, this auction, from a public policy point of view, one should question this auction and the reserve prices, because this auction, in my view, is leading to further consolidation of the industry in favor of the top 3 operators.
Right. Okay.
And overall, that's not good for the long term.
Right. Sanjay, we've run out of time. Thank you for that. But on the good note, that at least in the medium to near to medium term, prices are going to be safe for consumers, who of course we are also quite concerned about, but keeping in mind that there are certain policy implications of keeping high prices at the reserve level. Thank you very much, Sanjay. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.